you're self-employed and trying to get a mortgage using your tax returns, you're playing the game on hard mode. You're losing. Bank statement mortgages were geared towards the entrepreneur, self-employed clients, 1099 contractors, because guess what? You're not showing your income in the way the bank needs to see. And if you don't use a bank statement loan where you go off your deposit instead of your tax returns, you're never going to qualify for a mortgage, and it's going to be a long life living in a van down by the river. I'm Andrew Russell, owner and founder of RCG Mortgage. I specialize in home purchasers looking to buy the home of their dreams, or those looking to refinance to either save money, accomplish various goals, and put yourself in a better financial position. So it was late on a Wednesday night. I was putting my oldest Daniela to bed, singing our special songs, which is for another episode. And what happens? I get a text from a top agent that I work with. And it's an emergency situation. He has a client. The client won't get approved for whatever reason after months going to a big bank trying to buy a multi-million-dollar condo in Manhattan. So what do? As a great parent, I say, time to go to bed, kid. And I actually go downstairs and I give the client a call. And it turns out this client is self-employed. They have a business, they have tax returns, there's write-offs, there's all sorts of stuff. And when you're getting a jumbo loan, a loan typically over $1 million, and you're going to a big bank, sometimes they just put you through the ringer. So we had a conversation, I asked for some documents, and I realized very quick that the tax returns had all sorts of stuff going on with expenses and various write-offs and carryover losses and all these things that no lender is going to be okay with. So I knew right away. I said, this client is best positioned for a bank statement loan. So I said, let's press pause right now. Let's take a peek at your last 12 months of your business bank statements. Let's look at the revenue coming in. So we don't need these tax returns. We junked them, per se, as we say in the mortgage world. And we saw where the tax returns had, I think the revenue was somewhere around $12 million for the year. It whittled down to about $120,000 in net income, believe it or not, after expenses and various things, some carryover stuff. So that $10,000 a month, it just wasn't getting the job done. And they were going back to the big bank and they were writing letters and dissertation papers. Please, we promise we'll pay. Instead of going off that tax return, that $1 million a month in revenue, this client was 100% owner of the business. That $1 million a month in revenue, we could take half of that for income. So instead of $10,000 a month in income, which is $120,000 divided by 12, we had $1 million a month divided by 2. That $500,000, that's what we use for monthly income. So as you can imagine, they had no problem qualifying. So we're able to turn that frown upside down, come in late in the game, use a non-QM bank statement program. The interest rate was only a little bit higher, ever so small, and we were able to successfully close in 2 weeks from contract to close and make a success story out of someone that just straight up was going to get denied. And I can hear you now like, hey, Andrew, how is that even legal? Well, it's actually like a really awkward question. I'm not going to answer that. They're very legal. This is a regulated business we're in, and non-QM is a regulated mortgage product, and it's legal, especially in the state of New York. Or, hey, Andrew, sounds like that person got a higher rate than they should have. Well, listen, say the market rate was 6%. The bank statement program rate was 6.5%. But the fact of the matter is, yes, it's a little bit higher, but they were about to get denied. They could have lost their deposit, which I think at the time was $300,000. So it's still an amazing rate comparatively because it's either you go down door number 1 and get denied, or door number 2, which is close, and you have a beautiful condo overlooking Central Park. Who doesn't like that? And I can hear you say now, Andrew, you're making it seem so simple. What if my deposits vary month over month? Makes sense. Not every entrepreneur, business owner, or someone that's self-employed has the same amount of revenue coming in every month. So you do this magical thing called a letter of explanation, and you indicate your business, what do deposits typically look like, and that will assist us in the journey of calculating our income. But it's just as simple as, hey, business owner, let's look at 12 months of your bank statements. Let's calculate the revenue coming in. Let's look at that revenue, average it out over the 12 months. What is it a month? How much you own of your business? We take that percent, and guess what? That is what we give credit for income when you divide that in 2, assuming a 50% expense factor. All this stuff is stuff we're going to dive into. So how about we do this? How about we hop over right in front of my computer? I let you guys look under the hood, through my eyes, into a bank statement program, into our software, to exactly what it takes to apply and to qualify. All right, so here we are. We're going to show you what we see as mortgage professionals specializing in non-QM, under the hood, behind our eyes. So let's go. So here we go. We got our friend Johnny Bank Statements is applying to purchase. We're only going to fill out some of this stuff, guys. So you figure in the example of the condo purchase in Manhattan, it was actually a $3 million sale price. They were putting down 25%. So it's $2.25 million loan. So as we put this in, there was in a condo, there was a small homeowners insurance policy needed. It was about $100 a month. There was actually some property taxes from what I remember. I believe it was about $1,000 a month. And there was an HOA because it was a condo, and that cost was about $2,500 a month, believe it or not. So we have to figure out the interest rate. Now, this client had a 760 credit score. So we, as broker companies, we use the magical tool called Loan Sister. So a $3 million sale price, 25% down with a 760 score, self-employed in the city, a condo, and we did a 12-month bank statement. So what this does is it's going to show us what they qualify for. So here we go. It's going to pull up all the lenders we work with, best priced. So as an example, it looks like the rate would have been 6.75 based on current market. So there you go. So we're going to plug in that interest rate, 6.75. So the all-in payment is right over here, guys. It's $18,000 and change. Now, a portion of that is not going to be paid direct to the mortgage company, which is the association dues. So technically, it's about a $15,000 and change payment. But as you can see, we're going to save these changes. If we add some income, they were self-employed. We're just going to call this 1, 2, 3, self-employed LLC, owner, a nice contact number, right? And they've been doing this for quite some time. So let's say they've been doing it since 2020, January 1st. So remember in our example, this client showed all the $12 million a year in revenue and only $10,000 a month. So they had no debt, which we don't have to take that into account. But that $10,000 a month, so we use a debt to income ratio in mortgage, which means that $10,000 a month, if you think about it, how crazy is that? The payment is $18,000. It's almost double their monthly shown income is the payment, which is why the big banks were struggling and they weren't able to actually purchase. So if you remember, let's edit this income. So they had $1 million a month coming in. They were 100% owner of the business, and we can give them credit for half of that for income. So that $10,000 a month, if you do the math again, $1 million a month, half of that is what they can get credit for because they're 100% owner of the business. So that's $500,000. That's right, one more zero, folks. So that debt to income ratio, which they want to be under 50%, so in other words, half of your monthly income, they want to allocate for all your debt. It went from almost 200% to a 3. How crazy is that? But that goes to show the power of these programs. Think about it. Just by using this program, this buyer went from being able to have $10,000 a month of income to $500,000 a month of usable income. Now, just a quick once over of a bank statement. This is a very loose interpretation, but when we do bank statement programs, good old Jane customer. So we're going to look at right over here, we're going to look at the deposits. Now, this is one deposit in this bank statement for $3,600. Now, imagine this client every single month had multiple deposits, all adding up to about $1 million a month in deposits. Seems crazy? I looked at it myself. True story. So they want to make sure that these deposits are all business related, and they all were typically from the same place. So the only thing they're going to vet is if you have a transfer or something that's out of the ordinary, they may ask what the deposit is. But when you look at these bank statements, this is what they're going to base off. It's that simple. 12 months of these deposits, add them together. What percent of the business are you from an ownership perspective? Say 100%, cool. Now, worst case, most conservative, they'll give you credit for half of that, which was the $500,000. So as you can see, this is the power of these programs. First we obviously plug in the information to apply. We're going to run their credit, which we're not in this case. This client had a 760 score with no real debt. And we looked at their income, which is the second piece. If we did the tax returns, they didn't qualify. And here goes the bank statement calculation, which we showed off of this bank statement, which is all the deposits. As 100% owner, you add them all together and you see what it is over the year. And then you bring it down to a monthly. So $1 million a month times 12 is 12 million for the year. That, of course, monthly is $1 million. We go off of monthly income. 50% of that, assuming a 50% expense ratio. All that really means in layman's terms is ultimately the most conservative calculation of income for a bank statement program is half of the deposits. Now, we can get away with 90%. So this person could have had $900,000 a month of income, believe it or not. But we would have required a CPA letter saying that the business runs at a 10% expense factor, which not many do. So, rather than asking CPAs for letters that may not be actually factual and we're never going to get. So there you go. Case in point of why this was the best program for the client. So as you can see, guys, this $3 million sale price with 25% down in the bank statement program, the debt to income ratio of 3%, which is like almost nothing. This is the absolute best program for them. And that 675 rate, the market rate on these programs is only about 6%, 6.25%. So it's not a big variance. Actually, you know what I'm going to do, guys? Check out in the description. There's going to be a link to our bank statement loan checklist. It's going to be a free guide going over our bank statement program. So make sure you hit the description, click the link, check it out. It's something for free, and you definitely need it as it relates to these programs. But without a doubt, in this case of this client, if they didn't reach out and get in touch with us to go over these programs with them, they would have got denied. But it just goes to show how easy it is to qualify if you're just putting the right mortgage product. All right, I just showed you through my eyes, under the hood of a non-QM bank statement loan, exactly what it took to apply. What do we look at for qualification? What are the differences in rates, payments? I showed you all the good stuff. But you have to be living under a rock if you haven't heard of a DSCR, debt service coverage ratio, a non-QM loan taking the investment and investor world by storm. So check out our next video where we're going to do the same exact thing. We're going to look under the hood through my eyes on a DSCR loan. What does it take to qualify? How do you apply? We'll see you there.